with Murray and Roberts. Now remember, this is historically South Africa's largest engineering contractor, construction services company. It's not looking as glorious as it used to. It made a substantial loss in its year ended June 2012, related mostly to some very hefty project write-downs, Dubai Airport, Gautrain. After a substantial rights issue, it now sits with a market cap of about 11 billion rand. The rights issue is come and gone. It's finally now returned to profitability with its most recent results to June 2013. So it has a positive PE again of around 18, didn't pay any dividends. Lavan, I mean, you don't really see it here, but of all the companies, this used to be the biggest. Now with a market cap only of about 10 billion, you can see it's been bouncing along the bottom here. I think it's currently at around 28 rand a share. I mean, where do you see them going now? Henry Last, the new CEO, has kind of put a brave face on things. They've certainly got a substantial order book. What's your overall view?
I believe that Murray & Roberts is a business that is more of an industrial/engineering giant.
It has those elements to it,
yes.
Genrec and all the stuff for the trains and what have you.
It's got a number of different parts to it, and they're in the process of bedding down 100% acquisition of their Australian business. The Koch business is likely to come on board, is very profitable.
You like that deal, the buyout of the minorities in Clough?
I like it for a number of reasons. Firstly, we were with the CEO this morning and he gave us a breakdown of their recent financials. Australasia gives you the biggest component, not only of turnover, but of net profit, as well as headline earnings per share. It adds the flavor of international earnings to the group, which is a very big advantage.
And that's where they're also building that LNG port, Gorgon, on the island off of Australia. Fantastic sounding project where they pipe the natural gas in and then it gets shipped off to Asia from there.
That is just one of a number of exciting projects. There's also quite a bit of work happening in East Asia, the islands. They've also got joint ventures with a Korean company that's out of the Australian operation. And they're doing substantial work in Africa as well as in the Middle East. One of the points that I think is important is they've split their business from construction engineering. They do quite a bit of mine-related services, as well as a fair amount of engineering, and they've started regrouping their business. So they've put the Middle East and Africa into one pile and Australasia into another.
But my point is this. I mean, you know, this is a company that has fallen on hard times. That was a very expensive rights issue in the middle here, I think 25 or 22 or something. So people have been called upon, shareholders have been called upon to get stuck in here. Are they going to see substantial gains? I mean, I know it's a little bit tricky because it's all crystal ball reading stuff. Margins in this industry always a bit tricky. Are you confident as you stand here in your boots that if you pile in at 28, it's a money spinner?
For me, it's a portfolio buy at this level. Just to let you know, I've grown up in the construction and property industry, and the normal markup is 50% on your cost. So you pay 100 Rand for it, you'll mark it up 150 Rand to the consumer. Pull out all of your labor, administrative and management costs, you should drill down to margin anywhere from 7 to 5%.
In this industry, you say?
In this industry. However, in this environment...
Unfortunately, not always.
Unfortunately, it's not the case. And they're working on margins anywhere from 3 to 5, and they should be on the right side of 5. Some of the concerns that they have, and even though they've taken a lot of focus away from South Africa, some of their biggest concerns are the problems that they have with labor. 102 Rivonia Road, just down the road, is a very big project of theirs, and all the tools are down. There's no construction happening. Medupi is a big project of theirs, and they are very happy to report that they've managed to put up a number of stations in record time, and Hitachi have given them accolades to say fastest time ever. However, they only work for 7 out of 12 months, and that's because there's ongoing labor disputes. So their problem is labor in South Africa.
Similar themes, we'll come back to them. So are you telling me you're hot on Murray & Roberts?
I would have it as a portfolio buy, certainly. I would not be buying single stock futures on it.
Okay, we'll go with hot. I'm not hot on this one for the moment.